Hi, hello everyone. In this question again, we'll be looking at cost of sales and sales, then a broader perspective of the adjustment that are affected by the adjustment that you will make in cost of sales. So here in the question it says you are provided the pre-adjustment trial balance on 28 February 2021. Then data's control you're given is 261,150. Then trading stock is 800,000. Sales is 2,885,000. Cost of sales 1,600,000. Then consumable stores is 19,750. Then in the adjustment, that basically I'll be selecting adjustment that will relate to sales and cost of sales that will affect other areas as well. So the database return damaged goods with a cost price of 10,000. Right, remember this is the cost price. You just have to be careful the figures that you are given. Right, if they say selling price, that means you need to calculate cost price. But here you're given the cost price. That means you need to calculate selling price. Right, then the markup is 50% on cost, and is maintained by the business. No entries. Right, pay attention. No entries have been made pertaining to this. So then the second one say data. Fred was declared insolvent. His estate paid 30 cents in the rand. The rand rate was already received and recorded. Right. So basically what it means here is the 30 cents that was paid in the rand amounted to 300. So in every 30 cents, right, in every rand you pay 30 cents, and total amount received was 300. Right, and said write the rest off. So you need to write off the rest as recoverable. Right, to deal with that. Then during February, stock was damaged as a result of floods. Right, that is February. So you've got damaged stock. Safety insurance companies informed Peak Limited, right, that's the company, that they've transferred 24,000 in the business bank account in respect of the insurance claim. Right, so 24,000 has already been received. Safety insurance only covers 75% of any stock damage. No interest been made for stock damage or the insurance claim. Right, so you need to cater for that. So the insurance claim and the stock, nothing has been recorded yet, so no entry has been made. Then a physical stock counter on 29 February 2020 reflected trading stock 765,500 and consumable stores 19,500. Right, taking that into account, let's make our presentation. So you'll have sales, which is 2,805,000 minus, right, we don't have any other data's control, data's allowance, sorry. So what we do is we need to calculate this amount here. We need to calculate that amount. How much is it? So basically what you're going to do is you're given this amount, and this amount is equal to 100%. You want to calculate 150%. So that will be, because that's the selling price, that's 150 over the 100 times the 10,000. Right, that will give you, that's 150, should be 15,000. Right, yeah, 15,000. And 50% is 5,000, so that's 15,000. So minus 15,000. And then cost of sales. Cost of sales, that's 1,600,000. Minus 10,000. Right, you are reducing your cost of sales by the value of the goods that were returned, the cost price of the goods that were returned. You are reducing that. So this will give you minus 15, that's 280, 270, 2,870,000. Then this one is 1,590,000. So this will give you your gross profit, right? So that will give you your gross profit. Then you go to other incomes. You go to other incomes. So on other incomes, you will have insurance, right? Claim. Hi, that's 24,750. Then you have then there's bad debts recovered. Is there any? No, there's no bad debts recovered. There's no bad debts recovered. Okay, all right, so that's insurance claim. Then on operating expenses, we'll have the following. Operating expenses. Right, you'll have bad debts, assuming the only bad debts is the one that is in the question, right? So we need to calculate this. So what we need is the 70 cents. So we'll go 70 over 30 times 300, which should be 700. Right, 70 divided by 30 times 300. Yeah, 700. So bad debts. So suppose the bad debts here. That will be 700. That's an expense. Right, then for the others, right, for the others, allow me to erase here so I can make calculations. Right, for the others, right, we need to know there is ISO here, trading stock, deficit. Right, that will be $800,000 minus, right, we need to calculate the total value of the stock that was damaged, right? That will be 24,750 times 100 over 75, because the 24,000, this one represents the 75%. So we need to calculate the total amount of of the stock that was taken into account. Let me just do it this way, just that it comes out nicely. Right, I'll just write everything from the top. Right, I will not write this one because this one you already know. So I'll go to operating expenses. Paid debts. That will be 70 over 30 times 300, and we said it's 700. Then we have trading stock. Deficit, that will be 800,000 minus the result that we get from here, that will be equal to 24,750 times 100 divided by 75. That's 33,000. Right, so this will be 33,000. Then minus this amount here, the trading stock after stock take, which is 765,500. The reason why we're subtracting this because the question says no entry has been made for stock damage or the insurance claim, and so there's no entry at all. So that will give us 800,000 minus 33,000 minus 765, should be another 0 here. That's 765,000. No, there should be another 5 here, not a 0. That's 765,500. So deficit will be 1,500. Then loss on stock, or trading stock damaged, right? There is a loss on trading stock that was damaged. So that will be this 33,000 minus this, because the insurance only paid 24,750. So you have to recognize a loss, right? That's 33,000 minus 24,750. That's 8,250. So that's 33,000 minus 24,750. This will give you 8,250. Right, so those will be your expenses, right? Paid debts. Then now there's one left. Consumable stores, that will be 19,750. Right, which is the same here. The reason why I include this because it said consumable stores used, so I don't need to subtract anything, right? I don't need to subtract anything. If it's the question had said consumable stores on hand, then you need to subtract the amount from this balance in the balance sheet and the trial balance to get the consumable stores used. Because when you say total consumable stores are purchased during the year minus the on hand, you get consumable stores are used. Okay. Then for trading stock, right? Trading stock, obviously the amount that you're going to include for trading stock is this one, right? That will be the amount that you'll be showing for trading stock on the balance sheet. But then for debtors control, right? Debtors control will be 261,150, right? Minus, right, 15,000. Remember the 15,000 that we got here on the returns, right? You need to reduce your debtors, right? Minus the 1,000 was declared insolvent, his estate paid 30 cents in the rand. Then write the rest of the irrecoverable, right? So that's minus the total amount is 1,300 plus the 700. Where is the 700? This 700 here plus the 300, so minus 1,000, right? So that will be your debtors control, right? Because you are reducing your debtors with those amounts, so your debtors control will be given by this, or your net debtors, right? I hope you like it. If you have any questions, you can just write them on the platform under this video. Then if you really enjoy this particular presentation, please like the video, subscribe and share with others, and you can turn on your notification bells on so that when I upload anything you are notified. Thank you so much.